Hello students, I hope you're all doing good. Welcome to EduTap. A very good afternoon. Okay, so welcome to the series of concept series part 1 today, and we are starting with our subject costing. Okay, so I think you have done a lot of subjects in your previous videos. So I hope you were very enthusiastic about it and you learned a lot of things in our previous videos. And if yes, okay, so do subscribe and follow our YouTube channel and also join our Telegram channel so that you get regular updates about our subjects and you can learn a lot about all those subjects. Okay, and these subjects, these series are very essential and you can say important and very useful for your SEBI Grade A exam. Okay, so let us move on to the first question of costing. But before that, I'll tell you what all will be included in our today's video. So we'll be covering the first 5 chapters of your costing today. Okay, the first 5 chapters are, that is, the first 5 chapters: overview of cost and management accounting, the second material cost, labor cost, overhead cost, and activity based costing. These are the 5 chapters that we'll be covering today. Okay. Just give me a minute. It's not working. Okay, so we'll be covering the first 5 chapters today, and in the second part we'll be covering the next 6 chapters. Okay, our unit and output costing, job costing, contract costing, process costing, joint and byproduct costing, that you can see all our methods of costing, and our service costing. Okay, so we'll be covering the next 6 chapters in our part 2, and in part 3 we'll be covering the next 4 chapters that are all your techniques of costing. Okay, marginal, standard, budgetary, and lean system. Okay, so coming to our first chapter today, that is overview and cost and management accounting, we'll be covering, I'll try to cover this subject wise only, and I've tried to incorporate all those questions which are concept based so that I can make you understand the concept better, plus some previous year questions as well. Okay, so starting with our first question, that is, which of the following correctly describes cost accountancy? So this is the first concept that you should know in cost accounting. Okay, that there are 3 words that you need to know. First is my costing. Okay, costing, then is cost accounting, and the third is my cost accountancy. Okay, and the third is cost accountancy, for which the question has been asked. So what is costing? Costing is to determine the cost of our product. Okay, for example, my product is, say, a cake. Okay, a cake. So I have to determine what all expenses, what all cost is being incurred to manufacture this cake, right? So we'll say materials, and material is rupees 50, then my labor is rupees 20. Okay, labor cost is rupees 20 for making one piece of cake. So this is what, this is to determine the cost of my product. What is cost accounting? Cost accounting is when I have to record all these expenses. Okay, I have to list down all the expenses so that my expenses are all integrated in one part, so that I can make the decisions better. Now, how will we make the decisions? Cost accountancy will help us to make those decisions. What is cost accountancy basically? So I'll tell you here, the practice of applying both of these, costing and cost accounting. Okay, applying the principles and techniques of costing and cost accounting for cost control and profit determination. So what we are trying to do here in cost accountancy, when we have determined the cost, okay, and then we have recorded our cost, okay, so what we will do, we will now try to ascertain the profit and also try to control these costs. Okay, so cost accountancy is what? It is to apply the principles and techniques of costing and cost accounting, right? Now, what are the other options? So I think you have understood that option B is the correct option. What is the option 1? The process of finding out the cost of a product or service. When we have to find out the cost, what it is? It is costing. Okay, this is the feature of costing. C, the process of recording the expenditure to prepare these cost reports is what? It is cost accounting. Okay, and the method of classifying the cost into direct and indirect is also a feature of cost accounting only. When we are recording and classifying our expenditures, this is a feature of cost accounting. So when we are talking about cost accountancy, the option B describes it much better, right? I hope it is clear. Moving on to the next question. Financial accounting reveals total profit while cost accounting is what? Now, you tell me what is the difference between financial accounting and cost accounting. Can you give me the answer? Let me check if anybody is giving the answer to it. Okay. For second, everybody is saying B. Okay, let me tell you. Financial accounting is what and what is cost accounting. So I think in accounting, in your accounting subject, you must have learned about financial accounting, right? So what is financial accounting? Just a second, please. Yeah. So what is financial accounting? It is basically, when we are talking about financial accounting, it tells us the total profit of the organization. Okay, when we are making the P&L account, okay, or our income tax or sorry, income statements or P&L accounts, we determine that the profit of the firm is, for example, we are assuming the profit of the firm is rupees 30,000. Okay, so what is this 30,000? This is the total profit of the firm. Okay, now coming to cost accounting. Cost accounting tells us the profit of each product that the company is making. For example, I have two products. One is like cake and the second is biscuits. Okay, I'm manufacturing both of them. So the profit in manufacturing a cake or selling a cake is rupees 20,000, and for biscuits it is rupees 10,000. So can you see, cost accounting tells me that what is my profit or what is my loss or how much profit I am making in manufacturing one of the product. So this tells me the differentiation, different products, how these different products are making profit, whereas the financial accounting tells me the overall profit of the firm. So yes, you all are right. The answer is B. This financial accounting reveals total profit, while the cost accounting discloses the profit and loss for each product or job. Let us look at the other options as well quickly. Helps in tax compliance? No. Financial accounting will help in tax compliance. Records transactions only in monetary terms. Both of them records in monetary terms only. Is mandatory for all entities. Financial accounting is mandatory, whereas cost accounting is somewhat voluntary. Okay. Now, the next. So the answer is option B. Now coming to your question 3. So you tell me what is the answer for question 3. Financial accounting is for the whole of, very good. Very good, Arjun. You have given the correct explanation of the previous question. Now tell me for question 3, which of the following pairs is correctly matched? Correctly matched. Okay. So their expenses are being given to you and they are telling, is it under variable cost, fixed cost, committed cost or product cost? So first is factory rent, and is it a variable cost? Is my rent a variable cost? Okay, what is variable cost? The cost that changes, okay, the variable cost, the cost that changes with the level of output. Okay, when my level of production changes, that means I was producing 10 units, but now I am producing 20 units. Okay, so when my cost changes, okay, so variable cost, does variable cost changes? Variable cost like raw material. Of course, raw material to produce 10 units, if it was 100 kg, okay, so and okay, let us say 100 rupees. Oh, variable cost to produce 10 units was 100 rupees. Now, when I am increasing my production to 20 units, of course, the price for raw material will also change. The cost of raw material will also change. Maybe it can be 200 rupees now, right? So variable cost changes with the level of output. So factory rent changes or not? No. If your rent, if you are paying the rent for your building, even if you are not incurring any, you're not doing any production, then also you will have to pay the rent. Okay, the rent dealer will not say that, oh, you did not, produce this month, so I will not take the rent. No, rent has to be paid. So hence, rent is a fixed cost. Okay, rent is a fixed cost because fixed cost does not change with the level of output. Next is electricity for production. Electricity for production is a fixed cost or it is a variable cost. Of course, if we produce more, electricity will be used more. And if we are not producing, then electricity will be used less. Hence, this is not a fixed cost, it is a variable cost. Okay. So hence, this is also not correctly matched. Then C, option C, salary of CEO is a committed cost. What do you understand by the word committed? That means you have to pay this cost irrespective of the fact that production is being done or not. That means you have committed this cost. Like you have said that I will, pay you. Irrespective of the fact is my production of just 100 units or I am producing 1000 units, I will pay this much salary to you. So this is a committed cost. So hence this is correctly matched. The option C is correctly matched. Let us see the option D. Advertising expense is a product cost. Okay, so there are two types of cost. One is product cost and the second is period cost. Okay, so the period cost is what? Which are not directly attributable to the product. Okay, so advertising expense is not a part of production, whereas product cost, what is a product cost? All those costs which are incurred for producing or manufacturing a product. Okay, and period cost is the cost that are not included in the manufacturing cost. So advertising expense is a period cost and not a product cost. So hence this is also a incorrect pair, right? This is also incorrect pair. So the option C is the correct one, right? Shall we move ahead? There is a doubt in the previous question that says if they take production in the short run. Okay, here electricity for production is basically what? When electricity is used for production, okay, when we will be producing more, we'll be using more electricity. For example, machines, if the machine is working through electricity, okay, so then if we'll use this machine for producing more products, okay, then the electricity will be used more. So hence here there is no concept of short run or long run. Here we are talking about electricity for production. Okay, coming to question number 4, please try to answer the question 4. Which of the method of costing suits a bicycle manufacturing company using different costing methods for parts, for their parts? So, process costing, batch costing, job costing, and multiple costing. So, let me know, what do you understand by all of these costings? What is process costing, batch costing, job costing, and multiple costing? So, let me tell you one by one. Then I think you'll be able to answer it more accurately. So what is process costing? When do we use process costing? Okay, when there are homogeneous or similar products, okay, similar type of products are being made, but there is a large process to complete this manufacturing, and there is also mass production. So when we are producing similar type of a product, for example, sugar is similar, right? There are no various varieties in a sugar industry. Sugar is a homogeneous type of a product. So we can use process costing in sugar because we are producing it in mass and there is a homogeneous product. Whereas batch costing is what? When we try to understand the cost of separate batches. For example, tires or shoes or ready-made garments. Okay, here what we try to do is we make separate batches or lots. How? Let me take the example of tires only. Okay, for example, there is a company Apollo tires, and this Apollo tires is making tires for different companies, like it is making tires for Maruti Suzuki and it is making tires for Hyundai also. Okay, so when this Apollo tires is making different tires for different companies, they will produce in batches. So there will be a different batch of tires of Suzuki and there will be a different batch for Hyundai. Okay, so separate costing is done for separate batches, right? So batch costing is done for those where we have to produce in lots or batches, and also here the product is not very similar. Here in one batch the product is similar, but in the second batch the product will be different, right? So batch costing is what? When we are producing in lots. What is job costing? Job costing is when we have to make customized products. Okay, in batch costing also we were making customized products. Please note that. Job costing, we are making customized product, but it is according to the special requirements of the customer. For example, the customer wants to get his wall painted in red color. Okay, I as a customer, I want my wall to be painted in red color, but you might be wanting in a white color. So job is what? When manufacturing of a product is being done differently for different customers. So hence the product here is not homogeneous. So, and what is multiple costing? Multiple costing is when we are using different techniques of different methods of costing in one product. So let us see in cycle. In cycle there are different parts, as we said. So there are brake wires, there are wheels, and there is painting of the bicycle. So to manufacture the brake wires, there is a standardized process. Okay, these brake wires are made, okay, and then these are assembled into the bicycle. So for brake wires, can we use process costing because there is a standard process to make these brake wires, right? Then for wheels, as we told in tires, similarly in wheels, can we use batch costing because in a wheels manufacturing company there might be different, it will be manufacturing for different companies, hence we can use different batches for different companies, hence we can use batch costing for wheels. Similarly for painting can be done for job costing. Why? Because it can be according to the trend, like only 10 bicycles out of 100 bicycles, for 10 bicycles can be painted in red color, some can be painted in blue, for girls it can be painted in pink. So it is mostly customized according to the fashion trends or for the customer. So job costing can be done for painting. So hence here we are using different methods of costing. Hence the answer is D, multiple costing, right? Okay. I hope it is clear till here. Let me move ahead. The option D is the correct option. Now, question 5. 1 lakh spent on an old machine that cannot be recovered is, okay, 1 lakh spent on old machine that cannot be recovered is relevant cost, opportunity cost, sunk cost and imputed cost. So I hope you know the meaning of all of these types of costs. Okay, so tell me the answer first. I'm waiting for your answers. Okay, what is a relevant cost? What is a relevant cost? All those costs which are taken for the future or that affects, the cost that affects future decisions. So a machine that, a value of machine, this is 1 lakh, that is old machine. Now it cannot be recovered. Will it affect my future decision? No. Will it affect my future decision? No. Why? Because it is in history, it is in past. Second is my opportunity cost. What is my opportunity cost? The cost of, choosing an alternative method. Okay. So for example, I have to make a decision that either I should, invest in my business, in my capital. Okay, invest as a capital in the business, or I can use this money as a FD. Okay, so if I invest my money as a capital and if I ignore my FD, so whatever cost that is, that I have foregone in FD will be my opportunity cost. So the sacrifice that I make to choose one option, the sacrifice that I have made to choose this option is the opportunity cost. Okay. Now, what is sunk cost? Sunk cost is the historical, you can say, or the past cost. So can you say this 1 lakh that is spent on old machine that now cannot be recovered is my past cost? Yes. So this is my sunk cost. Okay, because this is the past cost and it does not affect my future decision, right? So this is my sunk cost. What is imputed cost? Imputed cost is that cost which is, you can say, notional in nature, or what can you say, that is not out of a pocket or a non-cash expense. Okay, the correct word can be the non-cash expense. For example, I am working in a building, okay, that I own, okay, that I own. So I don't have to pay the rent of it. But if I had to pay the rent, then what? So that is my imputed cost. The rent of the building that I still own, okay, that I'm not paying out of my pocket, but it is still an expense. So that is my imputed cost. That is my non-cash expense, or you can say depreciation also. Depreciation also we don't pay out of my pocket, right? So that is my imputed cost. Right? So I hope you have got the answer. What is the answer? C, sunk cost, because it is the past cost. Right? So sunk cost is what? Past expenditure that cannot be changed. Right? And rest we have discussed. Now coming to next question, under which technique are only variable costs considered for decision making? So now we are in brief, we'll be understanding what are different techniques: standard costing, absorption costing, marginal costing, and budgetary control. For all those who know, please try to answer this question. Under which technique only variable costs are considered for decision making? Okay, now what is standard costing? So if you understand this word standard, you might know what do you know about it. So standard costing is the predetermined cost, or whatever cost we have decided in advance of a product. Okay, this is a different method to determine this cost. that we'll be discussing later. But this is what, this is the predetermined cost. But here we include both my fixed cost and my variable cost. Okay, both of these will be considered while determining the standard cost. Then what is absorption costing? What is absorption costing? When there are several overheads, manufacturing overhead, then there is office and administration overhead, selling overhead. So all these overheads are to be charged to the product, irrespective of the fact there is fixed cost or variable cost. Both of them will be charged or absorbed to the product. Okay, so basically if the value of the product is, for example, before any overhead, it is rupees 100, okay, before any overhead. So and if my manufacturing overhead is rupees 20 that I need to charge on this product, that I need to absorb on this product. So now the value of this product will be rupees 100 plus 20, that is 120. So this is what absorption costing, that I need to charge my cost, that I need to charge my manufacturing overhead to the value of the product. Okay, so this is absorption costing. But here also, irrespective of the fact it is fixed cost or variable cost, we are charging the manufacturing overheads here, all the overheads. So both fixed cost and variable costs are taken into account. In marginal costing, what is marginal costing? It is the additional cost. It is the additional cost incurred to produce one more unit. Now, what do you understand by this? Let me take the example of pens. Okay, so I have a manufacturing company where I manufacture pens. So the quantity changes from 1 to 2. This is the quantity. Okay, first there was 1 unit of pen, now I am producing 2 units of pen. Okay, the total cost is you can say 100 rupees here, and here it is 120. Okay, right? Now this total cost comprises of 2 costs, that is my fixed cost and my variable cost. Okay, so you know fixed cost remains the same at all levels of output, so fixed cost won't change. For example, it is 50 rupees is my fixed cost, so this won't change if I am changing the level of output. But my variable cost, such as my raw material, okay, raw material to produce one pen was 50 rupees, but when I have to produce the second pen, my variable cost changes from 50 to 70 rupees. Okay, my variable cost changes from 50 to 70 rupees. So can you see what is the difference in the total cost? 20 rupees. And what is the difference in the variable cost? Rupees 20. So can you say that whatever change has come in the total cost, that is 20 rupees, has come from the variable cost only? Whatever change has come in the total cost has come from the variable cost. Okay, so this is what we are talking about in marginal costing. The additional cost, that is my rupees 20, the additional cost to produce one more level of output is marginal cost. So what is the additional cost? Rupees 20. What is the change in variable cost? Rupees 20. Hence, my marginal costing is the technique where only variable costs are considered. Hence, answer C is the, option C is the correct one. Okay, right? Now, what is budgetary control? Budgetary control is also a technique of costing where you determine or predetermine the budgets. Okay, what should be your sales budget? Okay, what should be your cash budget? What should be your cost budget? So you determine in advance that what should be the budget according to which you will, produce, you will sell your products, right? So budgetary control also takes into account both of them, fixed cost also and variable cost also, when we are talking about cost budgets. So I hope your answer is clear. What is marginal costing? Very good, Himanshu. And marginal costing is the correct one. Okay, I hope it is clear. Moving on to the question 7, which is a numerical based question, and it's very easy. try to answer this question on your own. Calculate the cost of production. We have to calculate the cost of production with the following information. We have material cost, labor cost, setup cost, manufacturing overheads is not given to us directly, but we can solve it, and selling overheads is also given to you. So you tell me, in cost of production, what all do we consider? Do you remember the cost sheet? Do you remember the cost sheet? Let me introduce you to it if you don't know. When we are making a cost sheet, we are first of all including all our direct cost, our direct material, direct labor, direct expenses, and then we find out the prime cost. Okay, so that means the sum of all the direct material, labor and expenses makes my prime cost, right? Then in prime cost, I add my manufacturing overheads, or you can say production overheads, right? When I add my manufacturing overheads or production overheads, I will get my either the works cost. Here I'll add some factory overheads first. My factory overheads, which I also can say manufacturing overheads only, right? So then I'll get my cost of production, or you can say works cost also. Works cost also. Then here I can also add my office and administration expenses. Okay, office and administration expenses can also be added. Then I'll get my works cost and cost of production, and then I can add my selling and distribution overheads. I think I've selling and distribution overheads, and then I get my cost of sales, right? So I need my cost of production only. So here direct material is given to me, direct labor and direct expenses. So it is 600 plus 150 material cost plus labor cost, plus my setup cost is my direct expenses, because these are the direct expenses that I need to incur on my production. So 200, this gives me my prime cost. 5 and 3, 9, 950 is my prime cost, right? Then manufacturing overheads are given to me, that is 20% of the labor cost. Can I calculate my manufacturing overheads? That is 20% of what is my direct labor? 150. Can you tell me what is the manufacturing overheads by calculating this? 20 divided by 100 into 150. That is rupees 30. So when I add my factory overheads, or you can say my manufacturing overheads here, rupees 30, I get my works cost. 980 gets my works cost. Okay. When I add my office and administration overheads, which are not given here, so we'll treat it as 0. We will get our cost of production. Okay. So this is a small correction that you can make here. When I add my factory overheads here, okay, it is works cost plus office overheads, then I'll get my cost of production. Okay. Can you understand this? So 980 is my answer. Why will you not consider selling overheads? Because it is after the cost of production. Selling and distribution overheads is included to get the cost of sales. Understood? Selling overhead will not be included. Very good, Arjun. That's excellent. So the answer is D, 980. I hope you have understood. Coming to question 8, again it is a numerical based question. calculate EOQ from the following data. What is EOQ? Can you tell me what is EOQ? Please try to calculate this, and firstly tell me what is EOQ. It is economic order quantity. What do you understand by this? What do you understand by economic order quantity? That means this is the quantity that is, we should order. This is the most economical order that we should make at the reorder level. Okay, so when our inventory reaches our reorder level, that means I have to call the supplier now and I have to order. Okay, so what quantity should I order? That is my EOQ, that is economic order quantity. This is the quantity that I need to order from the supplier, so that my inventory does not overstock, and also it is not understocked, right? So this is my economic order quantity. How do we calculate this? The formula is 2 into annual consumption. 2 into annual consumption, I am writing AC, into the reorder cost, or you can say the buying cost per order, upon the carrying cost, you can say storage cost, carrying cost, storage cost, or holding cost. Okay, per order per annum, storage cost per order per annum. So can you substitute the values? 2 into 1200 into what is the buying? 24, buying cost 24, upon storage cost is 16. So 2, 8, 8, 3 so it is 3600. Square root of 3600 is 60 units. So the answer is 60 units, option C. I hope you have answered it correctly. Yes, Arjun, very good. Right? So this is the formula, economic order quantity, where A is the annual consumption, okay, B is the buying or ordering cost per order. Okay, whenever you are solving the question, please see if per order value is given to you or not. Then storage cost per unit per annum. Okay, so storing cost of 1 unit per annum, that is my S. So when you have substituted the values, you will get 60 units. Now question number 9, this is a previous year question also, so please be careful while answering this question, and it's very easy, so I'll wait for you guys to answer. Who is responsible if raw material purchases are more expensive than expected? Who is responsible if the raw material that you are purchasing is more expensive than you expected it to be? So you expected that the raw material would cost you rupees 100, but now it is costing you 120. So who is responsible for that? You tell me the answer. Production manager, finance manager, purchase manager, marketing manager, or the operations manager? Who will be responsible? Okay, Himanshu and Arjun both are saying purchase manager. Very good. So the answer is purchase manager. Why? He will be responsible for negotiating the price. He will be responsible, right? That he has to see from which supplier he should take the supplies or the raw material, so that it can cost you how much you have thought of, right? So the answer is option C, the purchase manager. Okay, because he is responsible for negotiating the prices and also ensuring that the materials are bought as expected or at standard cost. Now for production manager, if you see, like what does production manager do? He is overseeing all the manufacturing part. Okay, he is there to supervise the manufacturing cost, not the cost to procure the material. Okay, he basically issues the raw material. He doesn't go and buy the raw material from the supplier. He gets it issued from our own inventory only. Now, who is a finance manager? He will manage the funds. He will say what is the budget. He will, what you can say, he will prepare the budget, right? He will not purchase it. He will prepare the budget that what should be the expected rate. Then marketing manager is basically, he is in the sales and the promotions. He is not related to the raw materials only. Then operations manager, he will basically see how efficient my labor is going, okay, how efficient is my raw material being processed, right? So he is in the operations team. He is not in the purchasing one, right? Moving ahead, question number 10. Canteen expenses for factory workers is classified as administration overheads, selling and distribution overheads, direct costs, or production overheads. So can you see what are we trying to say here? There is a canteen expense, that means canteen like food and beverages for factory laborers. So for example, my factory worker is going to have a tea, he is going to have lunch. So it is classified as which cost? He is my factory worker. Please note, he is my factory worker. Will it come under administration or office administration overheads? No, he is not my office staff. Selling and distribution, again, he is not my selling executive, sales executive. He is not my any person who is involved in sales. Then is it a direct cost? What is a direct cost? What is a direct cost? All those costs which are directly attributable to the product. So again, canteen expense, I cannot say this is my expense which I can directly add to my product cost. No. So this is what? This is my indirect cost. This is my indirect cost which is linked to production. So hence it is my production overhead. See, such easy questions can come in your exam, but the only thing is you have to be wise enough at that point of time that you are able to answer it correctly. Okay, people get confused during the exam because there is so much pressure, but please read the question very carefully. Okay, so the option is D, production overheads. Now the next, this is a part of your labor cost. The Emerson's efficiency plan guarantees A, only piece rate wages, B, only bonus wages, C, minimum time wages plus a graded bonus for efficiency, and D, time wages without any incentives. Okay, so with this I will also give you advice that please revise all those plans, wage incentive plans and piece rate and time rate plans. Okay, all the Taylor, then there is Merrick, then there is Emerson. So please revise them all. Here in this question we are revising the Emerson's efficiency plan. What does he say? So Emerson said that I will guarantee you that I will give you the time wage. Okay, if I have decided that for 1 hour, okay, that for 1 hour I'll give my labor rupees 100. So even if my labor has not produced anything, I will still be paying him rupees 100. Okay, and if my standard unit is that in 1 hour he has to produce at least 2 units. Okay, he has to produce at least 2 units. So I will now compare that if he is efficient or not. I will see if he is efficient or not according to the standard unit that I have decided. If in 1 hour he has done nothing, then also he'll get the time wage. He'll be guaranteed a time wage. But if he has completed the work or he has done some work, then he'll get a bonus for his efficiency. Okay, so even if the worker has not achieved these 2 units, but he has achieved 66 2/3% of the work. Okay, I'm not going to calculate here, but if he has achieved this much work, 66 2/3% of the work he has done, then he'll be given some bonus also. He'll be given, sorry, for 66 2/3 plus till 100% if he's done the work, then he'll be getting 20% of the bonus. Okay, so 100 rupees he was getting, 100 rupees so he will get, but if he has done 100% of the work, or he has done 66 2/3% of work, then he'll get 20% of bonus. That means 100 plus 20%, that is 120 rupees he will get. Okay, if he has just completed the standard units. But if he has achieved more than that, then gradually his bonus will be increased. For example, he has completed more than this. If he has done 101% of the work, then he'll get 21%. If he has done 102% of work, he'll get 22%. So gradually his bonus will increase. So can you see, only piece rate wages? No. Only bonus wages? No. Minimum time wages plus a graded bonus for efficiency? Yes. Yes. Minimum time wages he will get plus a graded bonus for efficiency also. Then D, time wages without any incentive is also wrong. So the answer is option C. Very good. Next, question number 12. Now we are talking about Taylor's differential piece rate system. Okay, Taylor's differential piece rate system says what? Is mainly designed to provide guaranteed wages, penalize the inefficient workers and reward the efficient workers, or reduce the labor turnover, or D, to promote group bonus schemes. Okay, now what did Taylor say? Taylor said that I will punish those workers who are inefficient. Okay, so if they have not completed the work, that means my actual my standard output was 2 units. Standard output was 2 units in 1 hour. In 1 hour. So if my labor has not completed this work, he will not be given the full wages. His wages will be deducted. That means whatever wages we have decided, he will get just 80% of it. Okay, if he is inefficient, he'll just get 80%. But if he is efficient, that means if he has completed the work, or he has completed more, okay, or more than this, so he is efficient, so he will be getting 120% of the decided wages. Okay, so he says that he will penalize the inefficient workers and he will reward the efficient workers. He does not provide any guaranteed wages. He do not provide any guaranteed wages. Will this reduce labor turnover? Will this reduce it? If I know in this company, or in this business, if I don't work properly, my salary will be deducted. Will I try to go here? Or even if I go, will I be retained in this company? No. This does not reduce the labor turnover, but it increases the labor turnover. That means my labor changes here in Taylor's differential piece rate system. Does it promote group bonuses scheme? No, that is a very different concept. So here the answer is B, penalize the inefficient workers and reward the efficient ones. Right, moving ahead. Everybody has answered very correctly. Yes, like carrot and stick. Now, there are 2 main terms that you should now know in labor cost. One is time study and one is motion study. I have included both of these questions. First of all, let us understand what is time study and what is the main objective of it. If you know it, please write the answer in the chat box. What is the main objective of time study? Okay, so let me take the example of a painter. Okay, a painter who is painting painting, one painting. Okay, so when what does time study say? It says that how much time this painter takes to complete one painting. For example, he paints this one painting in 1 hour. So this is the time that I will fix. Now, in the second time, and this painter will paint the second painting, I will suppose that he will now also take 1 hour only, right? So what I am trying here, I am fixing the standard time that is required to complete this job. Okay, here I do not consider the cost of doing this work. Here I'm just trying to figure out the time, that how much time is required to complete this job. So can you say, can you now guess the answer? Right? Very good. 13th is the option B, fixing the standard time to complete a job, right? Now in A, determining the cost of labor, no, cost is not considered. Measure the quality of work done, again no. I don't consider that how he has painted. I have to just see that is he has painted in 1 hour or not. Then record the total number of workers in a department, again no. Here I am just focusing on the time, right? Moving ahead, this was my time study. Now the next concept is motion study. Now again, taking the example of this painter only, who is painting the job, who is painting basically, right? And he's a painter. So when he is painting, right, he lost one brush and he kept on finding it. He kept on finding that brush. Then when he found out the brush, then one of his color went missing. Okay. Then when he found out that color also, he had to go to and fro, because his color palette was kept on some other shelf and the canvas was kept on some other area, because there was too much garbage kept on the side shelves. Am I clear? Am I making the picture clear to you? So there is a canvas, there is a lot of waste on the right side of the shelf. So he had to go to and fro, because he had to go some other shelf to take the color palette. And there was a lot of the ingredients that he wanted, the material that he wanted was missing. So this is what? This is some wastage of time. This is wastage of movement. So what does motion study say? Motion study says that before you start your work, you should eliminate any unnecessary movements, okay, so that you don't get tired, okay, and there is a lot of efficiency in your work, okay. So here what we are trying to do is we will eliminate all the unnecessary movements and we will improve the method of doing the work. So everybody has answered it correctly, that is the option B, right? So A, standard time, here we are not focusing on the standard time. Measure the labor cost, no. Record the time taken, again time is not considered. Now please see one thing very clearly, that motion study is conducted first and then we will conduct a time study, because when we have eliminated all the waste, wasteful time and everything, when we have eliminated all the unnecessary movement, only then we will note down the time that needs to be taken for one job, right? Okay, so motion study is conducted first and then the time study. Please note it down somewhere. Now again, next concept, when material prices fluctuate widely, which pricing method helps to smooth out the effect of such fluctuations? Okay, so do you know about the FIFO, LIFO, simple average price method, weighted average price method, and the replacement price method? What is it? So quickly I'll tell you. For example, I have purchased two lots of the same material. there were 10 units that I purchased first at the rate of rupees 100, you can say. And then I purchased the next lot where there were 100 units, okay, at the rate per unit, this is per unit rate, at rupees 120 per unit. Okay, so there are two lots. So what does the FIFO method say? FIFO method says whenever the production department will ask me that please issue some raw material, from the store, what I'll do? From which lot will I give first? Under the FIFO method, FIFO says first in, first out. Please write it down somewhere. First in, first out. So which lot will I consider first? The lot that entered into my supplies first. This lot will be considered first. So if I had to give 5 units to the production department, 5 units to the production department, then at what price will I give? At the price rupees 100, because this is the lot that I will consider first. Okay, fine. FIFO method, first in, first out. Then second is LIFO. LIFO says that I will consider the lot that came second, okay, or the latest lot that entered into my inventory. At that price I will issue to the production department. So when my production department will ask again for 5 units of production, 5 units of product, then I will give the production department at the rate of 120 rupees. Okay. So in both of these methods, can you say the material prices are fluctuating? Because in the inventory I have the material which is priced low or it is priced high, whereas I am issuing at at another rate. Okay, so in both of them the prices are fluctuating here, right? So these are both unstable methods, right? Then comes our simple average method. Simple average method says that I will not see which came first and which came second. What I'll try to do here is I will average my price. I will average 100 plus 100 plus 120, because there are two lots, so I'll divide it by 2. Okay, so 100 plus 120, it is 220. 220 divided by 2, that is 110. So when my production department will ask for any units of production, I will give it at 110 rupees. So can you say here it is a stable method? Is it a stable method here? Tell me please. Again no, because can you see, just for 10 units my material price has fluctuated. Okay, for 10 units it was 100 rupees, but most of the units that I purchased, okay, 100 units I purchased at the rupees 120. So my pricing should be near to 120, but here it is 110. So what I'll do here is I will consider the weighted average price method. Now first of all I'll tell you this is the answer. Now you will understand it how. Because in weighted average price method we will consider the units as well. Okay, so when we have taken 10 units at the rate 100 per unit, what is the total cost? 10 into 100, 1000. What is the total cost? 1000. And in this case, what is the total cost? 100 into 120, 12,000. Am I right? Right. So this is 13,000. 13,000 is my total cost of the material that is kept in my inventory. Now how many units are there? 110 units are kept in my inventory. So when I have to figure out what is the cost, what should be the cost per unit, I will divide the total cost with the total number of units, that is 13,000 divided by 110. Just solve it and tell me the answer. Just solve it and tell me the answer. 13,000 divided by 110. This is 118.18. So that means it is now close to 120 because most of the units that I bought was 118.18. So hence when I'm also considering the quantity that I have bought, the quantity that I have held in the inventory, when that is also considered, it will smooth out the effect of fluctuations, because now it will not fluctuate because here the quantities are also taken into account. So this is the correct answer. Okay. Now what is the replacement price? What do you understand by the term replacement? Let me see if you have answered it correctly now. I hope it is clear. What is replacement price method? That it is the price at which that will be charged if you brought the material today. We will not consider what is the price in our inventory. We will see what is the price today. If in our inventory it was 100 rupees, it was 120 rupees, but today when you go into the market and buy, it is at the rate of 130. So you will give the production department at the rate of 130. So this is a completely unstable method wherein we are altogether changing the price only, right? So I hope you have understood this. FIFO, LIFO, simple average price method, weighted average price method, and replacement price method, right? So the answer is D, weighted average price methods, because we take both price and quantity into account. Now next question is again your numerical based, and it is using FIFO method here. So opening stock is 100 units at the rate 10. That means in our inventory 100 units are there at the rupees 10. Then we have purchased 100 units at the rate rupees 12. We have to issue 150 units. Okay, using FIFO method we have issued 150 units. What is the value of closing stock? That means what is the value that is left in our inventory? So opening stock is 100 units at the rate 10 and we have purchased at the rate 12. So when we will issue these 150 units, from which lot will we give out first? First in, first out. So this was our first lot, this was our second lot. From this we will give out all our 100 units. So this will be cancelled out. This is not in our inventory now. From the next lot, 50 units will be given, 50 units will be issued. So at the rate of 12. Now what is the value of closing stock? How many units are left? 50 units are left. From which lot it is left? From lot 2. So at the rate 12 rupees. So 50 into 12, it is 600. The option D is the correct option, right? Good. Question 17. If the amount of overheads absorbed is more than actual overheads incurred, it is called dash. Now what are overheads? What is absorption? I hope you know it now because we have discussed it in the previous question. Absorption is when you have to charge that amount of overheads. For example, your overhead was rupees 20. When you have to charge this overhead to your product cost, okay, that is known as absorption, right? So here they are saying if the amounts of overheads that is absorbed is more than the actual overheads incurred. For example, the actual overheads that were incurred was rupees 100. Okay, all the indirect expenses that were 100 rupees, but the amount that we have absorbed is rupees 120. That means 20 rupees more you have absorbed in the product cost. So the value of the product has risen. What is it? It is known as over absorption of overheads. When it is absorbed more. If it would have been absorbed less, it would have been under absorption. Okay. Normal loss and abnormal gain are different aspects. Okay. Not in the not related to here overhead absorption here. So Over absorption is the correct answer. I hope this is very easy. Everybody has answered correctly B. Moving ahead. Question 18. A single overhead rate used for the entire factory regardless of the department products is known as what? So irrespective of the department, irrespective of the product, we are charging a single overhead rate. Okay, for example, we have taken that labor hours or labor cost, labor hours only. Labor hours is my absorption rate. According to the labor hours, I will consider the absorption rate, right? And I am using this labor hours for my material also, for labor also, for quality inspection also. For everything, I am using this single overhead rate only. What is this known as? Tell me, please. Tell me the answer quickly. It's very easy. Very good, Himanshu. It is blanket. When I am using a single overhead rate, it is known as the blanket overhead rate. Okay, as the name suggests, in the departmental overhead, it is according to the each department. The overhead rate would be different for each department. Hence, this is wrong. For multiple overhead also, there will be multiple overhead rates for every department, process, product. So hence, this is also incorrect. Predetermined overhead rate is this, to decide the overhead rate in advance. This can also be different. So hence the answer is blanket overhead rate when we are using a single rate, right? Next, continuous stock taking is a part of dash. Continuous stock taking means we have to record our inventory every time an issue or our receipts are done. Okay, so there is a store department. So every time new supplies come in or every time there is an issue, okay, we have to record this. This is known as continuous stock taking. So it is a part of what? It is a part of what? Please tell me the answer. Very good, Himanshu. Again, perpetual inventory is the correct answer. Perpetual inventory says that we will record our inventory whenever there is receipts, whenever there is supplies, we will record it. So it is perpetual inventory. What is ABC analysis? What is ABC analysis? When we categorize our inventory into three parts, A, B and C, where A is the high value goods, B is of moderate value goods and C is of low value goods. Okay, and we try to control our inventory. So this is a inventory control technique wherein we categorize our inventory, ABC analysis. And what is JIT? That is just in time analysis, wherein we order our products, order our raw material as and when we require. So continuous stock taking part is relevant here. Very good. The answer is perpetual inventory. Whosoever answered it correctly is very good. Okay, so understood. Next, each job has a dash prepared for it that bears the job number. Okay, there is a job number and which is used to collect all the cost data relating to the job. Okay, each job has a dash prepared for it and which is used to collect all the cost data relating to that job. Although this is a part of job costing, we can do it in our another video also, but you can still answer. It's very normal question. Can you tell me the answer? Again, very good. It's because it's very normal. It is job cost card or job cost card or job cost sheet, because here we bear the job number and also collect all the cost data relating to the job. What's a job time sheet? Wherein we see the labor hours worked in an organization, when the employee came, when he went out, what is his arrival time, what is his departure time. So all that record is in job timesheet. What is the job box? Job box is, for example, the job number is 55C. Okay, 55C is the job number. So there is a job box that is created with this number, and all the information related to this job will be, all the documents that are related to this job will be put this in box. We will put this in box. Okay. So B, job cost card sheet is the correct answer. Very good. Next, salary paid to the plant supervisor is a part of what? Salary we have paid to the, please keep in mind, plant supervisor. Plant, or you can say factory, or you can say production supervisor, is a part of what? Direct expense hai, or manufacturing overheads, quality control cost, administration cost, or selling and distribution cost. Very easy. Quickly give me the answer. It is a part of Arjun, please read the question carefully. Salary paid to plant supervisor is a part of dash. When this supervisor is working in the production department, is he supervising just one product, or will he supervise all the full production of all the products? He'll be supervising every product. So he is not, this is not a direct expense. We cannot attribute it to just one product. Okay, when he is supervising, he will supervise every product, whatever product is being manufactured from that factory or plant. Okay, so this is not a direct expense, this is a manufacturing overhead. Okay, so this is an indirect expense, but it is related to manufacturing or production, so it is manufacturing overhead, right? Very good. B. Now quality control cost. Quality control cost is also a part of manufacturing overhead. Okay, because it is also indirect expense related to the product, right? But plant supervisor and quality control costs are two different types of cost. So it cannot be a part of each other, right? So manufacturing overhead के part हैं दोनों, salary of plant supervisor also and the quality control cost also. Then administration cost and selling and distribution cost are two different costs which are not related to the plant. So let's move ahead. Now, next question. In inventory control, the maximum level and the minimum level are fixed mainly to. So basically this is a technique of inventory control, right? In which what we are trying to do here is we are fixing the maximum level of stock that we should have in our inventory, and what should be the minimum level of stock that there should be in the inventory. Why do we do that? Why do we fix the maximum level and minimum level, that this much stock should be there in our inventory? Maximum stock and minimum stock. Why? So that we don't overstock, okay, and also there is no understocking, or you can say stock out. Because if we'll overstock, of course the holding cost, the carrying cost of that units will be too high. Okay, and if and also our money will be blocked if we'll if we'll do overstocking. And if we'll understock, if there is a stock out, then our production can have some obstacles. So hence the answer is B, avoid overstocking and stockouts. So option A, maintain equal stock of all materials. No, not equal stock. We have to see overstocking and understocking here. Then ensure that suppliers get regular orders. Suppliers, do we care about the suppliers that they should get regular orders? No. These statements are very confusing if you read them. Do we have to ensure about our suppliers? No. Reduce the lead time for materials? Of course, lead time will not be reduced if you overstock or understock, or there is a maximum level or minimum level. We cannot reduce it. So hence, again, D is also not the correct option. Answer is B. Next, okay, there's a question about lead time. Lead time depends upon supplier's delivery speed, distance from supplier, internal processing time for purchase order, or all of the above. What is lead time? Basically the time taken by the supplier to restock our material. Okay, when I call my supplier, for example, I call my supplier on day 1 and I tell him that I want this material. On day 7 he gives my supplies to me. Okay, so these 7 days that were in between is my lead time. Okay, so it depends on what? Lead time depends on what? Yes, very good everyone. It is D. It depends on the supplier delivery speed, distance, and also the internal processing time. Okay, internal processing time of the purchase order is also my lead time. Okay, when I decide that as I have to order my product today, so then I will go to my head office or the production, my purchase manager, and I'll tell him that I want this product. So this internal processing time that I take will also be considered under lead time. Next, now again a little numerical based, I think. Yes, a firm decides to produce 1000 units instead of buying them. Okay, so there is a decision taken by the firm that they will now make the product rather than buying it. Okay, so the extra material and labor costs are 50,000 and the fixed cost remains the same. Fixed cost is same, it doesn't change, but there will be extra cost of 50,000. So the relevant cost for decision making is, what is the relevant cost? Will it be 0? Of course not, because there is a change. What is the change? What is the change? Change is in the variable cost. That is my material and labor. So 50,000 that is changed, okay, and it is affecting my decision. This 50,000 will affect my decision or not? Either I should make it or buy it. Yes, it will impact my decision. I'll see if I should incur this 50,000 or not. So this is a relevant cost for decision making, this 50,000. Now why C is not the correct answer? Because the fixed cost is same only, it doesn't change. The total cost of 1000 units is basically a a past cost, and historical cost is also not considered. Again, it is a sunk cost. So 50,000 that is changing will be my relevant cost. The answer is B. Very good everyone. I'm so proud of you guys. The last question for the day, and very important, because it covers one more important concept. Okay, although it's not important from the paper point of view, activity based costing is not in your syllabus, but we can expect questions like these also. Now, which of the following explains the main advantage of activity based costing over the traditional costing? Now, what is the traditional costing? What is traditional costing? Traditional costing says that when I add my all the direct expenses, okay, my direct material, direct labor, direct expenses, this become my direct cost and I can directly attribute it to my product. But there are some costs which are indirect in nature, okay, like rent, okay, or there can be some stationery or any salary of a supervisor. These are some indirect costs. I cannot directly attribute it to my product. So traditional costing says that I will figure out a overhead rate. For example, according to the labor hours, I will figure out a rate and then I will charge my indirect expenses, the whole indirect expenses, to the product, okay, in a proportion according to the overhead rate. For example, we say 20% of my total overheads should be given to the product A. Okay, so this is my traditional costing. But what is activity based costing? Activity based costing says that I have to determine different overhead rates for different departments, different process, different products. So there should be a different cost driver, or you can say different overhead rate for different products. So let us see what we are trying to see here. What are the features that they have given? what are the main advantage of activity-based costing? So they are mainly giving the advantages of ABC, activity-based costing. So this uses fewer cost pools, making competition easier? No, it doesn't use few cost pools, it uses more. It assigns all overhead based on a single cost driver like labor hours? No, we do this in traditional costing. Okay. Then it provides more accurate product costing by linking the overheads to activities that actually cause them. That is the correct choice, because we will directly, very good, everybody has given the answer also correctly. We will have different overheads and we will link according to the product. For example, I have to see the quality inspection. There is an overhead of quality inspection. This is an indirect expense, quality inspection cost. So I will determine the overhead rate according to what? According to the number of times inspection is being held. Okay, the number of times my inspection is being held will become my cost driver. So this has very small cost drivers for every overhead. Then it completely eliminates the fixed cost from the product costing. No, this is completely wrong, because fixed cost and variable cost both are considered here. Okay, so we have done our 25 questions and this includes first 5 chapters. We'll meet tomorrow at the same time and we'll be doing the next 6 chapters, which includes all the methods of costing. Okay, so stay tuned till and keep learning, and please join our Telegram channel. You will get a PDF of this whole questions in our Telegram. So please do follow our YouTube channel, subscribe to it, like this video, comment, and then of course join our Telegram channel for more updates as well. Thank you so much, and keep learning and have a very good day.